The fine line between Bitcoin Paradise and Bearadise. That's where we're hovering right now, guys. Hey, it's Keith Allen, and today we're going to climb in to the charts as usual and see if we can get some clarity on what exactly is developing here. Let me go ahead and fade this out and climb in. I got a pretty quick turnaround today here. Before we climb in, do me a favor, like, share, comment, and subscribe if you like these analysis. I really appreciate the support you guys are showing me, and let's keep it up. Live chat is open on YouTube. If you'd like to join the conversation, I'd love to have you join me. So let's just get right into it if we can. So as we know, Bitcoin's been trading in a really tight range here for it seems like a week or so. And traders just really want to know when are we going to break this range? And the market is split on whether we're going to break to the upside or break down to the downside. And that's kind of common, I guess, after we have a Fed rate cut like we've had. We know that the cutting cycle has begun now. We've got some clarity on where we're going with this. The terminal rate has been set, the target time frame has been set, but the market's still not really decisive on whether they think this is going to lead to a good thing. I mean, eventually it will, but in the near term, are we looking at a pullback because of recessionary fears, or are we going to see a breakout because the market has confidence in the Fed's decision? That's not something you hear a whole lot. So because there's so much speculation around that, we got to really climb into the charts and see exactly what is influencing price and what levels we need to watch to get us past that. So we're going to dive into FireCharts, and we're going to look at the liquidity because as I often say, liquidity dampens volatility, and we have a good illustration of that in FireCharts. And we're also going to show you how that is well correlated with some key technical levels. So let's just start, I guess, with FireCharts, and we can take a look at the liquidity, and then we'll look at the candle chart, see how the TA is stacking up next to that, and what levels we're really going to be focused on here. Starting on the order book and FireCharts, you can see that we have strong resistance right up here at the 65K range. And this is, you can see there's a little insulation here on both sides of it now. And this correlates perfectly with two levels. One being the mid-cycle top, 2021 mid-cycle top, and the other being the 200-day moving average. And I can show you those very quickly here on the chart as we get to today. At this point in time, as you can see, I've been scrolling and checking out some historical data here, and we're going to get to that in a second. Sorry for taking you the long way through that. But as you can see, we have this 2021 mid-cycle top right here, which goes all the way back to, well, 2021, as the title would suggest. And we have this 200-day moving average, which looked like we might be getting a breakout, but so far we've actually had rejection after rejection, going back to a little over a week ago, September 19th, where we first tested it, rejected a second time, didn't even make it up there the third day, fourth day, solid rejection. And then Monday, after a strong weekly close above the 21-week moving average, looked like we were going to be in the clear. And as you can see, we're now hovering on that 21-week moving average, just barely, with a very tight range here. And so that's really something that we're watching very, very closely, right? Bullish, of course, that we have that we had a weekly close above the 21-week moving average and that we're holding it. But a little concerning that we are having a hard time breaking this 200-day moving average with any conviction, right? These wicks are all signs of weakness. I guess you could interpret it however you want to interpret this. We had wicks above, there's signs of strength. Wicks below, there's a sign of weakness. But the mid-cycle top still serving as a pretty solid barrier here to getting to Paradise. Now, we have obviously a weekly close on Sunday, but Monday we have the quarterly close, the monthly and the quarterly close coming up. So those are noteworthy, and I think that we could conceivably hover in this position right here in this tight little range, at least maybe through the weekend, we start to see the dynamic in the order book change a little bit, and that puts us in position for a potential move on the on the monthly and quarterly close open. So those are also things to watch very, very closely here. The key levels, as we mentioned, that 21-week moving average, which we're barely holding on to. We opened up and we did just barely wick just below it on the weekly candle open. And I want to see decisive full candle bodies above this level, really, to give me some confidence and conviction that we can indeed go after this mid-cycle top. And of course, the 2021 of course, the 200-day moving average also in that range, right? So we've got to also clear this same set of circumstances, right? Get above this, and then listen. If we have to grind here in this range, I'm okay with that too. It's a very tight range, but eventually something is going to give way. And historically, and this is where I'm going to go back in history and look at how prices interacted and engaged with the 200-day moving average after death crosses. You remember last month we had a series of death crosses, and I guess I'll put them back in for anybody who hasn't seen those. We had a series of death crosses all happen in a very tight frame of time, and historically those are obviously, number one, they're lagging indicators, but they're obviously bearish. And so shortly after that, we saw a golden cross between the 100 and the 200-week moving average, which is inherently bullish. So these things point to the asset finding a bottom, and this points to the asset working its way over time into a recovery. And so we found, at least for the moment, we found a double bottom here, which is something that we like to see, and it's something that we've seen frequently with prior death crosses. And so for the moment, that is our local bottom here, and this is just shy of 54K. And so if things break down and we lose, for example, we lose this 21-week moving average, then I would look down here for a retest at this 50-week moving average. And then, of course, double bottom, breaking down from that, you have a wick down here to that 49.5 level, and then ultimately the trend line here. So as we look back in history at these levels, and I'm going to isolate the 200 for us on this so that we can just very clearly see how prices reacted with that level on prior breakdowns. I'm going to go all the way back in history here. And you can see that the 200 really likes to serve as support, and man, especially on the weekly, on the daily as well. But there's very few times that it's really broken down on the weekly time frame. So if things really go south, that could be that could serve as support. But obviously, we would have broken through the trend line, as I showed you a few minutes ago. So let's look at some prior breakdowns of that moving average and how price tends to react on the approach back up, right? So this is a good example of a double bottom coming off of this was a death cross. That's why I have that yellow arrow there. Coming off of death cross is a nice rebound. And it wasn't a straight shot up. You can see that price really engaged with that 200-day moving average for quite some time. This was January 6th of 2012, and it was all the way until it was the end of February until things worked their way out, beginning of March. So that's a few months, and that's something to remember, right? Patience here. Patience is really a muscle that you need to build. It's a muscle memory you need to build in this game if you're trading. So once made it above, consolidated, and then obviously bull run extended here. Another breakdown here coming off of this was back in 2013. Breakdown double bottom here, recovery, and again, fighting for the line here. And you see there was quite a bit of time. Again, this was months engaging. I think it looks like, let's see, May 30. Let's call it June 1st to make it easy. June to August. Look how long. June, July. Again, a couple months until things broke down. And that breakdown was the straw that broke the camel's back and led to a full bear market here. And look, double bottom. Once again, we go for the recovery. And this led to a solid recovery, right? There was one attempt to get out that was ultimately rejected. This was how much time? June 30th, we'll call it July 1st to August. There's a month, it took a couple of months, June, July, August, it took several months actually to climb out of this. So that again, that breaking of that, solidly breaking above that 200-day moving average led to a beautiful bull market that topped in 2017. And again, we see how breakdowns work. It doesn't always happen on the first time, right? In or out. And here you can see it's kind of small here, but there was another double bottom here on support and a rejection here, solid rejection from the 200-day moving average, which led to a much deeper breakdown, full bear market that lasted for quite some time. 2019, right? That's years. And so that was a tough time, by the way, for anybody who wasn't there. So here we are coming off the 2019 top. And again, things broke down. You can see there's that double bottom and on the recovery. Failed attempt, breakdown, another attempt, and a clean candle breakout, which again looked like it might fake out. But this was a nice recovery for anybody who got caught here. And now, of course, I believe that this would, had it not been for COVID, and this is the COVID crash right here, had it not been for COVID, this is likely where things would have taken off, in my opinion. So this was a bit of an anomaly, actually a large anomaly, and it changed the entire structure of not just the market, but the global economy off of this. And so now we obviously know the story since then. Recovery out, back above that 200-day moving average. A beautiful bull run has taken us to really where we are now. Here's the breakdown coming off of the 2021 mid-cycle top. Here's actually a triple bottom here. Recovery back above. Again, these don't always happen quick. They don't always happen easy. And this was a relief rally, largely believed to have been manipulated and led to a breakdown. Double bottom on the breakdown. A recovery back to the 200-day moving average, right? So you're noticing the pattern of how much we like to see these double bottoms here, right? But you're also noticing the pattern of how important this 200-day moving average is. Hard rejection. In 2 days, it was done, right? Took a second attempt. It was done. And the bear was squarely in until we found footing after the FTX crash. Are you detecting a pattern here? Right? This was, kind of a black swan event with the FTX crash. Obviously, COVID was a black swan event. And now we see the trend line coming into play here as it did, down here, trend line, recovering the 200-day moving average led to this beautiful bull run. And that's really what we're seeing now is the breakdown here from that. So again, double bottom here on a recovery. And now we are at this inflection point of trying to navigate above this 200-day moving average. We could be an extended chop here. It's hard to believe we've been chopping for a long time here since first breaking out above our prior all-time high. We've really been in this range since back in March, and so obviously we have a monthly quarterly close coming up here at the beginning of the week, something to watch very, very closely. And obviously, we have other forces in play. Geopolitical tension, as tight as it's been, and getting tighter around the world, that could certainly lead to a black swan event. And obviously, we have an election happening in the U.S. in November, which the market seems to, even though the consensus seems to be like, at least in terms of Bitcoin, that the Bitcoin price really doesn't care about the candidates. There might be a knee-jerk reaction to one candidate, winning versus the other, but ultimately, the crypto market is going to do what it always does. And so I think that's really I think that the election is a bit of noise in terms of the long-term outcome. But I think that since it is a hot topic right now and it's so close, that I think that the market could conceivably hover in this range, toy with your emotions and your net worth until we get past that election, and then find clarity. That also, of course, gives us time to find clarity in the economic numbers, which the market is trying to determine if these moves do indeed lead us to a recession or a recovery. So I think, and again, I'm no economist, but I do think that we're at the point where good news equals good news. And so we do have a GDP number coming out tomorrow. And obviously, we have jobless numbers coming out tomorrow. Last week's numbers were good, which is, largely, I think, was a catalyst to help us get this move after a close above the 21-week moving average. So those are the things I'm watching, and this might give us some clues as we watch these numbers develop here, the economic numbers develop over time. That may offer some clarity for the market to determine whether we are indeed headed for a recession or not. And of course, the Fed trying to navigate to that soft landing. So back to FireCharts here. I want to show you that we do have liquidity here in the range that is dampening that volatility, not just to the upside, but also to the downside here. And we're seeing some movement. And so seeing this movement is obviously good because it can tell us when momentum shifts are happening. But to get a real shift up, we've got to break through this level up here, which hasn't happened. You do see some whale buying here, which is positive. But I also expect to see some selling on buying of dips and selling on rips, just as we saw yesterday. Well, actually, I'm on the weekly chart, right? As we topped out here yesterday, and we did get a little bit of selling, and we got a little dip, and now we got a little bit of buying. So those are all things to keep, to be mindful of. I will just zoom out a bit here and give us just a bit more perspective here. As you can see, that we do have some decent bid liquidity holding price up here into this range, and we're just pinned in a very tight range right now. And for me, that 200-day moving average is really the line in the sand that could lead us to paradise or Bearadise. So I'm not sure what your thoughts are on it. Let's see. Looks like XBT. What do we got here? According to XBT3D, the Dems are a risk to the space because of the continuation of choke point, and that may be the reason for chop. Note that I don't have a political view on your election. We know. Well, you have a view. You always have a view, my friend, but you don't have a vote. So that being what it is, I don't think that, crypto policy and the health of crypto is obviously important to this community. But in the grand scheme of things, with everything that is going on in the U.S. right now and around the world right now, I'm not sure how important it is to the vast, vast majority of voters. Obviously, it's important to us, but in the rank of things, I don't think it's a determining factor for the vast majority of voters. We'll let that lie right there. And with that, I'm going to wrap it here, guys. Do want to let you know that we are having a pretty awesome sale. Not a pretty awesome sale, a very awesome sale with our friends at Kingfisher, who are doing the same deal we are. You sign up for a year premium plus for material indicators. You will get a 15-month deal from the Kingfisher for the price of 12 months. So that's 3 months free or 25% off, however you'd like to look at it. And same set of circumstances. You sign up for a year subscription to the Kingfisher, and they're going to give you a code to get a 15-month premium plus package from material indicators for the price of 12 months. Check it out, guys. Great opportunity for you to load up on tools that can help you navigate this market. Here's the deal right here. Unlock the ultimate crypto trading edge. I'll have details for you in the description. And one last comment from a good friend, XBT3D. Choke point is about the space's liquidity and liquidity counts. Sure, there's no doubt about it. I think policy is certainly going to be something that is discussed and revised moving forward, whoever makes it to the office. So with that, we're going to wrap it and give you that one last view of the order book. And we've got a few days to chop through this before we get any clarity. Monthly and quarterly close coming up very, very soon. Gonna wrap it right there, guys. Again, if you like the streams, do me a favor, smash all the buttons, leave a comment. I love the comments and I engage with each and every one of them. And most importantly, I appreciate your support. As always, have a fantastic day and trade safe, my friends.